What if one company was quietly building the future of telehealth and just got positioned to dominate the weight loss drug boom that's changing healthcare forever? That's HIMS and Hers, ticker symbol HIMS, and I think the stock is setting up for a potential breakout that most of Wall Street hasn't priced in. Today we'll break down exactly what's driving the momentum, what the numbers are telling us, and what could send HIMS stock exploding higher heading into earnings. Hims and Hers Health is a direct-to-consumer telehealth platform founded in 2017, which started out with its main focus being treating conditions like hair loss and sexual health issues, which were very oftenly searched online, and they saw there was an issue in this. But now it has became a fully fledged online healthcare ecosystem where they offer prescriptions, wellness products, dermatology, and mental health services, just to name a couple of the things. And it's as we can see here, it's grown to all 50 states and Washington D.C. The real story, though, I think, is subscriptions. Their subscription model is the main thing and the priority where I think investors need to be keeping an eye on, as 90% of HIMS's revenue is reoccurring. So every month, customers renew prescriptions for things like Cetranol, GLP-1, weight loss medications, and others, which has created a total subscriber base of 2.4 million, and it has grown year over year 31%, which is why I think the stock has continued to grow at such high values. That this subscription model means sticky revenue, predictable growth, and high lifetime value per user, which is something that every investor loves to see. So let's talk about the price. HIMS has been on a monster this year, up over nearly 86% year to date, even after a sharp pullback we've seen in recent weeks. And even though this has happened, I think the dip has just been an opportunity. This is coming especially after the company just confirmed it will report Q3 2025 earnings on November 3rd. And traders are clearly bracing for a big move coming as soon as they release these earnings. I think there will be a sharp turn inside the stock price, especially due to the amount of the float that is being shorted currently. Here's why I think the FDA recently ended the shorted status on Ozempic and Wegovy, which caused a quick sell-off because HIMS had been compounding its own GLP-1 alternatives, but that reaction ignored the long game. HIMS isn't reselling drugs; it's building a vertically integrated healthcare brand that with massive cross-selling potential. As we could see here, HIMS offers virtual consultations. It offers in-house manufacturing compounding to ensure supply and control quality. HIMS has moved into manufacturing and compounding its own products. Also, we see pharmacy fulfillment has built its own network of affiliate pharmacies and fulfillment centers. Not only this, but data ownership by creating a closed loop system where cash paying subscribers interact directly with the platform. HIMS retains valuable data on patient behavior, treatment outcomes, and adherence, which is very valuable data that could be used as to grow the company as well as sell to other companies. Even with all the setbacks we've seen recently, analysts are still expecting over 70% year over year revenue growth, which is elite level growth for a profitable healthcare company. And not only this, but as I mentioned earlier, nearly 30% of the float is shorted, and this creates a perfect recipe for a potential short squeeze as soon as we see this earnings. I think it's something to definitely keep an eye on, especially as we move closer to the earnings date. I think it's something that is very plausible and could happen with good news breaking on the earnings day. So let's get into fundamentals. Revenue last quarter, HIMS pulled in 544.8 million, which was up 73% year over year, and they guided for this year 2.3 to 2.4 billion, which is a very strong revenue for a company at this early of a stage. Profitability was something that also I wanted to point out, as earnings per share came in at 17 cents, which was almost triple last year's number. And net income was also very high for the full year, as we're seeing them start to create a high profit margin. And this is coming with their margins that are nearly 80%, thanks to its subscription model that carries this forward. Over not only this, we've seen also that they have over $1.1 billion in cash now and minimal net debt, meaning it can fund growth without dilution. And at a valuation of a forward PE around 40 at times, it's not cheap, but not crazy for this level of growth. If we contextualize the current trajectory and we annualize it for how it's grown, and we can approximize that HIMS will hit 2 billion in revenue by 2026. And we've seen analysts project 2.8 billion in revenue, putting it on a trajectory to potentially hit or exceed 2 billion. The company's recent expansion into the menopause treatment market is expected to be a key driver in this growth. And for context, that's roughly where Teladoc was when it traded 5 to 6 times its own sales, whereas HIMS is currently trading at 4 times sales with positive earnings and momentum and a huge retail sentiment that is growing it relative to peers. I think it is very undervalued, and it is something to watch in the next coming months. Now, sentiment is where the real explosion could come from, as analysts have ratings that are very mixed. We see the average is right about where the price is currently, and there are some as high as 85 with some as low as 25. But retail investors are heavily bullish, as I've seen. They have their own subreddit. I use StockTwits a lot, and there's a lot of supporters on there. Short interest is also at record highs with over 30% of the float, which means if earnings surprise to the upside, a massive squeeze could definitely follow. On top of that, insiders have remained quiet, but relatively quiet, and the company's brand momentum on TikTok and social platforms is skyrocketing every day. We see over 82, almost 82% of the float is institutional ownership, which gives a lot of confidence inside the current price and how much growth can happen in the future. This kind of consumer buzz we've seen in recent months tends to front run financial results, and retail sentiment here is overwhelmingly optimistic heading into the November earnings, which is something I think will translate into the earnings, and why I think when I look at the chart here, and I think we got to zoom out on this one, but I think HIMS is one of the most underrated and misunderstood growth stories in the market right now. After it topped out at about $73 a share, HIMS retraced into the $45 to $50 support, where the same level that acted as a major consolidation earlier this year. That's key. It's where buyers have historically stepped up in before the last breakout. If earnings confirm continued revenue growth and strong GLP-1 adoption, a move back towards 60 to 65 looks highly realistic based on support. And I was looking at the inflow data, and it looks like if this happens, if we clear 70, we're talking all-time new highs. And I think it is very possible, depending on the news we get next week. And momentum is very much so coiling, especially when you look at all the momentum averages, and the fundamentals just need to light the fuse that will cause the stock to hit all-time highs again. And here is my personal take. I think that HIMS is has gotten punished really by the stock with its regulatory noise, but ignoring the fact that HIMS and hers has real brand power, a reoccurring revenue engine, and a clear roadmap into weight loss and women's health. If management can deliver solid guidance on November 3rd, I believe that shorts are absolutely trapped and the stock will rip higher. Personally, I am eyeing an entry in the $45 to $48 range, targeting a move closer to 65 to 70 over the next 6 to 12 months. If we get strong numbers, I'll scale in, but I'm keeping risk below 40 in case the story changes. Of course, as we know, high risk, high reward, but the setup looks incredible. So let's wrap it up. HIMS is not just another telehealth stock. It's a brand machine that's becoming the face of online healthcare. The fundamentals are strong, the sentiment is explosive, and the chart looks primed for a reversal. So earnings on November 3rd could be the catalyst that decides everything. If HIMS beats, the stock could easily explode back to the $70 range and beyond. If you guys found this breakdown helpful, make sure you guys drop a like, subscribe to the channel, and comment your HIMS price target below. I'll feature a few in my next video. Thank you guys for watching, and remember, fundamentals drive the story. Price action just tells us when the crowd finally wakes up. So thank you guys. Take care. Peace.